Hello and welcome to this episode of the Policy Bazaar show. Today we are going to talk about something we all love, and that is our motor vehicle. Our cars, our two-wheelers, and the insurance regulator has kick-started a process to overhaul the entire own damage motor insurance policy segment. A working group has been set up, and that working group has submitted its recommendations, and we are going to decode those recommendations and what could possibly lie ahead for us when we buy a motor insurance policy. Joining me, two very eminent experts, Sajja Praveen Chowdary, who is the business head for motor insurance at PolicyBazaar.com. Also with me is Jagjeet Siddhu, who is the head distribution at Kotak General Insurance. Thank you, gentlemen, both of you, for coming by. Jagjeet, my first question to you, could you take us through 5 key takeaways from this working group? What are they seeking to do?
So, Vivek, what is happening that if you see last 20 years, our society has come a lot of distance. And if you talk about precisely between 2000 and 2019, society has become more prosperous in India. Society has become more hyperactive thanks to a lot of communication platforms available. So, these platforms have actually allowed a lot of information to exchange on daily basis and with never before pace. So that has actually influenced the social behavior, personal behavior of the society. I think this is yet to be accounted for in the motor insurance. I think these recommendations which have been drafted by IRDAI bring forth, an objective sense of making motor insurance more simple and acceptable to the Indian motor vehicle owners. So I think, according to me, this has been a very welcome approach, a simplistic and transparent way to do motor insurance. I think this can come out as a revolutionary to all the motor citizens of the country. 5 important things, which they have got into this kind of recommendations are that sum insured has been made more simplistic to calculate. NCBs are made more simplistic to calculate. There have been deductibles which has been put into. OD premium, and add-on premium are given more objectivity. And of course, new technology is also allowed to take part in motor insurance going from here.
So, Sajja, when Jagjeet talks about the sum insured has been made more simplistic, can you tell us a little more about how it has been made simplistic?
Yes. So, earlier the way it used to happen is the sum insured component, which used to be called IDV of a vehicle in a motor insurance policy, used to be derived basis depreciation chart which is there over our ex-showroom price of a vehicle. When you say ex-showroom price of a vehicle, it's basically, it's just a basic value of the car which the dealer is selling at. Let's assume our ex-showroom price of Vento today might be about 10 lakh rupees, whereas the on-road price is what the customer is actually shelling out from the pocket, which would be about roughly 11.5 lakh rupees, which would have about 1 lakh or 1.5 lakh of registration charges, road taxes, other stuff, everything put together. So what the current new draft says is that the sum insured should always be arrived at, on a depreciation basis, the on-road, value of the car rather than the ex-showroom price of the vehicle. At the same time, having said, there's also an option which was recommended which says basically for the first 3 years of the vehicle or the private car, it should ideally remain the on-road price of a vehicle, which means if the car is to undergo a total loss, then you would actually get entire invoice value of on-road price of the car in the first 3 years, and followed by from 4th year onwards, it will be depreciated on that on-road price instead of being depreciated on the ex-showroom price, which would means a better benefit for a consumer or less confusion for a customer, which today exists because a new car would cost 11.5 lakh rupees, but the customer would get, in case of a total loss, say a 9 lakh, 8.5 lakhs, which is because of depreciation on the ex-showroom price.
Jagjeet, can you elaborate on what this means for a consumer at the end of the day?
So, Vivek, as I mentioned, that these recommendations bring a lot of transparency and simplicity to all the motor vehicle owners. So, to give you an example, that the way sum insured or the basic valuation on which the premium was calculated was actually inconsistent with all the insurance companies. So, can you imagine, same person driving same car in same location are given 3, 4, 5 different prices, and these 4, 5, 6 different prices prices were actually, derived on different basic values. How can you have a different basic value? I think instead the pricing should be more of a derivative of, social behavior, driving habits, how much a customer drives, what car he owns. I think this recommendation brings that consistency in calculation that sum insured, at the same time making price more a derivative feature of these interplays what I suggested a minute back.
Sajja, there is certain recommendations around the age-based approach of a vehicle as well. Could you take us through that? What changes are proposed?
Yeah, so basically, the age-based depreciation, while one is the sum insured part which we just discussed, apart from that, there's also age-based depreciation which has been spoken about on partial losses. What do you mean by partial losses is anything that is excluding a total loss of a vehicle, where a small repair or a small damage or a small accident which gets the car to be repaired. These are called partial losses, where a particular part has to be replaced, or a particular part has to be, a dent has to be removed, and all so on and so forth. What used to happen earlier was that there are about 4 categories of parts which have been created in the old motor tariff, where rubber and nylon parts and certain parts used to attract a certain depreciation. Glass parts used to not attract some depreciation, and then there was something like wooden parts and other parts used to attract different depreciation, which is based on age. So when a customer used to get an actual final bill of repair, at times it is not so encouraging to see, there are about 4 or 5 categories which were spread out, and in each category you were told to shell out some amount, and it's not consistent across the bill. So, as a customer, you might not get that confidence that insurance company is being fair with you in paying whatever they owe you. Now, what happens in this new norm or new draft that is suggested is that irrespective of whatever the type of part it might be, the depreciation value is the same, and it depreciates with year. So the first year is 10%, second year is 20%, so on and so forth. So if you get a bill tomorrow of 50,000 rupees, you clearly know for all the parts is the same depreciation which is applied, and clearly it says this is your share, this is your insurer's share, and this is the final bill, which generates a lot of confidence from customers, and that's what is required, I guess, in an under-penetrated country like India, where insurance is so under-penetrated.
Jagjeet, what about add-on coverages? I mean, there's a lot of talk about that as well. How would that benefit customers according to you?
When we come to add-on, this reminds me a statement, somebody shared with me that, OD, your own damage policy premium, is like a giraffe neck with a burgeoning big body of add-on, behind it. So, I mean, if you see in the current juncture, last 8-10 years post-de-tariffing in 2007, lots of companies has tried to bring a lot of comfort to the customer in name of add-ons, and these add-ons actually are sold with different name, which kind of creating lots of confusion, at the same time actually defeating the purpose of customer satisfaction. I think these guidelines to a great extent is considering to accommodate and bring in more important and most required add-on as a part of own damage policy, and that will help to bring a more comprehensive product to the customer, and then leaving him with a thought and with a option to actually opt out for more add-on if at all it is required. To give you an example, so if at all you are buying a new car and you are taking a OD cover in the ongoing regime, then you have to take additional engine protector policy, your roadside assistance, and then return to invoice kind of add-on. In the current juncture where the IRDAI is proposing this kind of recommendation, so they are allowing us to include like water ingression in the engine as a part of OD cover, which is a big solace to customer and brings lot of comfort to customer if at all they are driving the vehicles in different season. Similarly, when they are buying vehicle, they are given an option to actually keep the sum insured same for coming 3 years with a return to invoice cover. So if at all they are having a total loss or theft, they are rest assured for at least 3 years from the time they buy the car to have a indemnification of claim to the extent of sum insured assured because the RTI was part of, or return to invoice being a part of the insurance policy. So again, a very welcome initiative by IRDAI to get this kind of simplification and requisite in place for customer, bring a lot of customer satisfaction in place.
Similarly, I guess consumables cover also is another thing. Today, you need to take a separate add-on called consumables in case if there's an accident and if there's a lubricant oil which has to be changed, or there's certain things like nut and bolt which have to be changed. All of these would have been covered only under consumables add-on. If you did not have this add-on, then you had to pay it out of your own pocket. Now, what the draft says is that similar to the way water ingression is being covered under basic policy, as Jagjeet has just said, similarly consumables is being made part of the basic policy. So you no longer need to have what a consumables cover is and then worry whether you're taking it or not. Otherwise, what happens today is the customer also needs to delve into it, understand it, worry about it, whether am I taking this cover, whether am I not taking this cover. This is something which we discussed in the last episode as well, where we spoke about add-on covers a lot. That's predominantly what we're speaking about.
All right, time for a quick break here on the Policy Bazaar show. When we come back, we take some of your questions as well pertaining to motor insurance. Keep watching the Policy Bazaar show. Welcome back. You're watching the Policy Bazaar show, and we are talking about the revolutionary change that the IRDAI is bringing in to the motor insurance segment. A working group set up by the regulator has come out with its recommendations, and we are decoding these recommendations and its impact on motor insurance policy holders. What happens to existing policy holders, Sajja? Does when the new norms come into play, will they cover the existing policies, or will they be only for policies sold after the new norms?
See, the new norms are also expected to make some changes in the pricing. So mostly it would be that the existing policyholders will continue with the existing policy terms till such a policy expires, and it's only going to impact the policyholders who are going to take a fresh policy once these come into effect. That's what it looks like right now. But once again, we need to wait for the final regulation to come out and see how it pans out.
Do you believe, Jagjeet, that the overall insurance ecosystem, and Sajja and I have been talking about this in previous shows, episodes of this show, that you have a large population of people, especially two-wheelers, who don't even have the basic insurance in place. We saw some uptick with the new Motor Vehicle Act. If you could tell us that will the overall ecosystem, whatever may have been the reasons for people not to want to insure themselves, do these guidelines bring us closer to bringing these 60-70% of the uninsured market, uninsured vehicles into the insurance fold?
No, if you compare Indian market with the Western world, you'll find that though we are one of the most literate nation across the globe, but still the information and knowledge toward general insurance or motor vehicle insurance, or for that matter any insurance, is relatively low. And possibly maybe that is the reason if you compare the frequency of claim between Western world and India, you'll find stark difference. When you go to country like USA or UK, out of 100 hardly 5 to 8 people claim, whereas you go to UK, you'll find hardly people between 10 to 15 out of 100 claim, whereas in India the claim frequency or the number of people out of 100 who claims are close to 20 to 25 people. Possibly there is a reason which I can understand from it is lack of knowledge, lack of guidance. So I think the information toward the insurance is relatively low. When we talk about these guidelines bring a amount of simplicity in the whole motor program structure that will allow a insured to understand the program by himself, understand and make decision on whether to claim and whether not to claim, and then show relatively more interest toward taking motor insurance policy. So as far as your question related to 50-60% who are uninsured, uninsured goes, whether they would be covered. I think the changes in the Motor Vehicle Act are well received. People have understood. I think, our media has been very, very vigilant enough to make people more aware why insurance is required, and possibly it has shown a lot of attraction towards taking insurance. So I think both motor vehicle put together and these recommendations which are coming to light, I think make people go a little bit more easy toward general insurance, and seeing the benefit out of it, and of course the requirement towards society, we may see improvement in the number of people getting insured over a period of time.
Jagjeet, also this, these guidelines or these recommendations seem to be very detailed, right? They're even going into that the rating should be done on the basis of torque instead of CC. What does this mean?
I must appreciate that. I think IRDAI has been a little futuristic, not little, I would say more than a little futuristic. They are contemplating, coming of hybrid and electric vehicles in action in coming time, and I think the agenda of the government also has been to get, electrical vehicle as quickly as possible. One, of course, to go green, and at the same time, to save on a lot of fossil fuels. So I think when you go into electrical vehicles or hybrid kind of vehicles, CC may not be a relevant, a consideration to actually, calculate insurance premium. Torque may be one of those important attributes which can actually lead to calculation of premium or pricing a policy in much sensitive manner, much sensible manner in coming time. I think very, very welcome approach, and with electrical vehicles and hybrid vehicles coming into picture, torque is the most important attributes to actually work on.
Sajja, these proposed guidelines are even going into things like, vehicles used for delivery.
Yes.
Of any product that we have these delivery boys on, two-wheelers.
Yes. Or
even certain cab categories. Why is that, and what is the difference being proposed there?
Sure. See, one of this question is very much, the answer for this is very much relatable to the earlier question that you asked Jagjeet about, under-penetration of insurance in the country. For the insurance ecosystem to survive and to be in a long term, to sustain with better prices to customer, also at the same time the companies to sustain, they also have to be a right risk-reward categorization, right? So basically you have to price the right customer or price the customer the right way. Today what's happening is, unfortunately, for example, the exact two-wheeler segment that you spoke about, there are a lot of two-wheelers which are also used for commercial usage, like delivery of medicines, delivery of food, delivery of various other things, which has a different risk altogether. See, there's a person who uses this two-wheeler every day in the morning for 15 minutes to reach work, and in the 15 minutes in the evening to reach back home, and probably for about an hour or two over the weekend with his family, versus there's a two-wheeler which is used almost for about 13 to 15 hours a day on the road. The risk is definitely different. So you have to price them differently. If you don't do that, what would end up is like what Jagjeet was saying, is that probably our loss ratios or our claim frequencies will shoot up through the roof. That somewhere insurance companies will have to pass on this burden back to the consumers. Then what happens is that a genuine customer who's using it for personal use might be burdened by the premium. And hence, as and trends from the same categorization, right? Whether it's about the maxi cabs that we're referring to, where the passenger carrying capacity is higher, while people might be registering it as white-plated private vehicles, they might be using it actually in the form of taxis. Similarly, the two-wheelers. So what the draft says is, it suggests that the RTO should start to register or categorize these differently, so that this can be captured and they can be priced accordingly. This is very much a welcome approach, because somewhere a balance is required between a risk and the price. Otherwise, at some point of time, it's bound to go bad.
One final question before we take some viewer questions. How will the pricing, according to you, get affected when these new guidelines come?
So, while I think Jagjeet is the right person to answer from the insurer perspective, I'll try and put some perspective from how would it look from a consumer perspective. As I said, right, the risk and price have to be matched, or they have to be taken care of. So there are multiple aspects in this which the draft takes care of. One is from a consumer perspective. There are a lot of things like consumables which are being made a part of the basic cover. The water ingression, damage to engine due to water ingression, being made part of a basic cover. The sum insured part, which is being increased or relatively increased, and it's being made part of basic cover. While these things while these things would increase the premium by a bit, but they're also on the other side, the draft also takes care of what might be bothering the insurance ecosystem today. See, there are things like, for example, there are fraudulent elements which also operate in the market, which try to take advantage of motor insurance or claims, and they then try and try to find various loopholes. So there are certain things like the deductible, the mandated deductible is being linked to sum insured as a percentage of sum insured, which used to be otherwise be 1,000 or 2,000 rupees standard earlier, and this mandated deductible increases for the second claim onwards, or else at the same time the claim has to be reported within 24 hours to the insurer. So on and so forth. There are multiple things which have been recommended. So as a result of it, in the short term, while there might be slight increase in premium, but in a longer term, this is for a benefit of the industry. I think the fraudulent elements will also get somewhere washed out, and finally the benefits will start to come back to the consumers, and over a period of time the premium should again follow the same trail as what they are today. That's what we feel it would be like.
Jagjeet, do you see premiums going up after these guidelines?
Yeah, to some extent, yes, because you are going to get additional coverage out of it, and that will allow insurance companies to have little bit increase in premium. At the same time, there is also recommendation for minimum premium, so that will again have little increase in premium, but still customer will be allowed to actually gain maximum out of it, and with the maximum of coverages.
Okay. We have a question which has come in from Venu Gopal Iyer of Chennai. His question is that the area where I reside is quite prone to water logging, and my car had an engine problem due to water logging in 2015 in my colony. I was told that damage to the engine is not covered under the regular policy that they had, and a separate engine cover should have been taken. I read recently that such cover is no longer necessary as per the new rules. Will my basic policy take care of all damages related to engine going forward? Sajja?
So basically, yes, some part of it is correct, while not entirely true. Yes, the reason it might not have been covered is that you would have started the engine post the water logging, and that would have led to some damage within the engine. What's being proposed in the new draft is that there are multiple damages that can happen to the engine. One is due to water ingression. The other might be either due to leakage of engine oil or brake oil or the other stuff, right? So anything that is any damage that happens due to this water ingression is being taken care of under the basic policy under new draft. If let's assume the damage is either due to leakage of engine oil or various other stuff, that will still continue to be part of the engine protector add-on. Yes, however, the reason behind that being the water ingression might be a regular or a basic thing that might happen in many of the waterlogging areas, like it has happened with this customer or with you. And that part would be taken care of. But for any other kind of damages like oil leakage and others and subsequent damage, you need to have an engine protector add-on taken.
All right, gentlemen, thank you very much, both of you, for coming by and sharing your perspective with our viewers. If you too have a question, you can write to us at PolicyBazaar@policybazaar.com. That's all the time we have in this edition of the Policy Bazaar Show. We'll be back next week with lots more information around insurance. Thanks for watching. Keep watching Republic TV.